Good morning, everyone. This is Rob McDougall from Zhang Financial here with your weekly economic update. Today is Monday, June 9th, 2025. So let's go through the economic activity, the economic data that was released last week, and we'd have to say on average, a little slower, a little more negative than we expected. So we'll take a look at the Atlanta Federal Reserve's expectation for GDP growth in the second quarter in a moment, but let's take a look at these data points. Starting off last Monday, the ISM Manufacturing Index, you may recall the ISM Manufacturing, the ISM Service Index, which we'll talk about in a moment, both are scaled at 50. So above 50 means expansion, below contraction, higher the better, lower the worse it is. So manufacturing has been largely below 50 for the last 5 years, and it peeks its head above it every once in a while. So last month we were up over 50, and 2 months ago we were over 50. Last month we were at 49ish. So the expectation for this month was 49.5 for the month of May. It came in at 48.5. So it's a little disappointing. And again, looks like the manufacturing sector has not really caught its stride yet. Tuesday, employment data, the JOLTS job opening, not a metric that we paid that much attention to, but some investors have been lately. This number is from April. So the expectation is we had 7.1 million jobs open and available at the end of April. And the consensus was right at 710. So the actual number came in closer to 7.4 million. So far more, another 300,000 more jobs than expected. That was a good data point. Then the next day we had the ADP employment change. That was negative. Expectations, 118,000 new jobs. ADP survey came in at only 37. Same day, ISM services, again, with that 50 demarcation line. The expectation was 52. Now this, unlike the manufacturing survey, has been consistently above 50 and really, for the most part over the last 3 years, 54 and above. Expectation was it would come in at 52. It came in at 49.9. That's disappointing. So again, that would suggest maybe we're seeing some slowing in the service sector month of May. We'll follow that. Thursday, we had initial jobless claims. Expectation was 235. That was a negative upside surprise, 247. Then on Friday, this was the big day. We had non-farm payrolls, unemployment rate, average hourly earnings, and across a couple of them okay and one just neutral. So the non-farm payroll, the expectation was expected to come in at 130,000, and there was a big downside bias. A lot of commentators indicating after the ADP number on Wednesday that we were going to see a shortfall from that consensus. Actually, we came in better, 139,000. The unemployment rate, it's good. It was static at 4.2, but again, there were some expectations after the unemployment claims the day before. We might move up to 4.3 or above, so it's good. We were at 4.2. The most positive, or one of the more positive data points last week, average hourly earnings was a positive 0.3 in May. It was a positive 0.4 in May versus the consensus of a positive 0.3. So all in all, would have to say a mixed bag with a negative bias on last week's economic data. So did that affect the Atlanta Federal Reserve's expectation? Probably not, because it came out in the middle of the week. Nonetheless, they did take down their expectation, and their expectation says it's been pretty volatile this quarter, more so than normal. So 2 weeks ago, they moved their expectation up to 4.6%. Last week brought it back down to 3.8%. Inflation expectations hardly moved last week. We're still about 2.3%. That's the expectation built into the futures market of inflation average over the next 10 years. Now, in terms of interest rate, Fed funds, we do have a Fed meeting. Their conference will be on June 18th. The odds have tightened even further that there's no chance we're going to get a cut, 99% plus. Built in that we will not. And in terms of what we should see for the rest of the year, the Fed funds future market suggests that 2 or more cuts now is going to be about 61% probability of that occurring. That's down from the week before. And the probability of 3 or more cuts had been 30% last week. The week before, last week it finished at 22% probability. So, all that economic data, what happened in the markets last week, was actually a favorable, on average, net for U.S. equities. S&P 500 up about 1.6%. That leaves it up 2.6% year to date. It's pretty impressive given the lows that we saw in April. The developed markets ex-U.S. up a little less than a percent, about 0.8%, but year to date is up 15.8%. Last equity data point, emerging markets up strongly last week. Emerging markets up 2.21, really driven by China, up nearly 3%. So year to date, the emerging market index up nearly 10%. Fixed income, conversely, last week, tough week in the U.S. The 2-year yield was up 14 basis points, 10-year up 10. So the Bloomberg U.S. Aggregate Bond Index was down 44 basis points, and now on a year-to-date basis is up exactly 2.0%. Economic data for this week. Let's go through it. Starting on Wednesday, the big theme this week, inflation data. Of course, initial jobless claims, sentiment. But the inflation data will definitely, most likely, I should say, be the driver if this data is going to move the markets at all. So on Wednesday, CPI. So we'll have both headline numbers and the core number. The headline number is expected for May to be exactly as it was in April, up 0.2% month over month. However, the headline number is actually expected to, or the core number is actually expected to move up just slightly. Month of April up 0.2. It's expected to come in at a 0.3% month over month increase. The next day we'll have PPI, both core and headline. In terms of the headline number, well, both of these numbers way higher than they were the month before, only because the month of April we had a kind of a surprise, a shock that the PPI numbers dropped as much as they did. So in the month of April, the PPI had dropped 0.5%, minus 0.5. The core PPI was down 0.4. Now those are expected to go back to normal-ish for the month of May. That'll be reported on Thursday. So the core is expected to come in at a positive 0.3% month over month, and the headline number is expected to be up 0.2% month over month. Also on Thursday, initial jobless claims. Again, we had that surprise negative at 247,000 announced last week. This week, the consensus estimates are at 239,000. Last data point expected at on Friday, Michigan consumer sentiment. Now this has been in free fall, a very ugly chart. The expectations, however, for the month of June is that it improved. So month of May it came in at 52.2. The expectation consensus for the month of June is 53.5. So that is a wrap up. That is it for the economic activity last week, this week, and how the markets performed last week. We thank you for attending, and we'll look forward to seeing you next week. Thank you.